It is Monday, October 7th, 2019. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a get your ass kicked at Jiu-Jitsu Monday, and I just leave it at that. I got my ass kicked a lot. I don't know what it was. So it was a little bit. I don't know. I wasn't moving as fast as I have been relatively recently, and so it was a little disappointing. And my apologies for starting a little bit late here, but we did do awards tonight. So promotions rather. I did not get promoted, but several of my teammates did, and it was good to see them getting to move up in the ranks. Myself, you know what? I know I need to improve, so maybe that's the next stripe will come along with that. But as far as my performance today, like I said, I wasn't hitting some of the stuff that I normally do, and I was having a little bit of trouble finding that special angle today. It's like normally I'm pretty good about finding that soft spot where if I just adjust my hips a little bit or shift my weight a little bit, it opens up the opportunity to flip my opponent off of me or get me in a better position to do something. But I spent a lot of time on defense today, and I wasn't feeling it. I was really, really tired, and so like I said, I spent most of my time on defense today. But I did do one or two inspired moves. I had one situation where my opponent was on top of me, and he'd shifted his hand a little bit low, and so I caught his hand with my hand and managed to sweep him right off of me. It was pretty cool. I wish that somebody was recording it, because that's something that would have worked, gi or no gi, as a matter of fact. Simply because it was something not attached to the gi itself, not dependent upon the gi. But yeah, basically all we did today was sparring, and that's cool. We need to do it every once in a while, but whew, I got my ass kicked today, just pretty much over and over and over again. And yeah, it appears also I'm getting my ass kicked on Twitter. Apparently they are serious about the suspension. Apparently Antifa is such precious little angels that you can't say anything about them, especially, given the fact that they are kind of a violent group from what I've seen. I don't know. I think they're somebody. You guys might have caught this. They had that thing where the little old lady's trying to cross the street with the walker, and some guy's yelling at her, "You Nazi!" Blah blah blah. I think what got me the most about it is that she and her companion were not the only people going to that meeting. I'm sure that there was somebody who was of equivalent size or age that guy could have got up in the face of, but no, he chose to get up in front of the face of a little old lady. And I think that's what gripes me the most about it, is that, it shows some fucking class, man. I mean, really, why are you gonna fuck with a little old lady? Anyway, yeah, that's why I got kicked off of Twitter. As I said that I thought that people that did that should basically be beaten to a pulp, and I stand by that. What if that was your grandmother? Somebody getting up in your grandmother's face like that, dude. I don't give a fuck. If that was somebody getting up in my grandmother's face, I would just end that person. That person would no longer be a person by the time I was finished. And you know what? If that's the kind of people you want to kick off of Twitter, well, I'm happy you did it then. Anyway, let's go ahead and throw down into some music. And I might be a little bit late getting back, because I definitely got to get the funk off of me. I mean, we ran through the ringer today. I think I rolled with 6 different people, maybe. I don't know, but I was just barely trying to stay alive the whole time. Anyway, as far as where we're going to go with our first dance, it's Let's go with institutionalized body count. First dance here on Coin Metal. And that was Exodus with the last act of Defiance. And so, we talk a lot about Tether on this show, and it's mostly because I don't like it. I think that it's basically it's counterfeit fiat. That because it's being used as a means of manipulating the market. I think. I've always said that the way I think it works is that Bitfinex is owned by iFinex, and they're also the issuer of Tether, right? And so iFinex issues Tether. They take the Tether to Bitfinex, right? And they sell it for Bitcoin at a loss. This causes the price to go up, right? Then they take the Bitcoin and they go to another exchange. I don't know which one. Maybe they do it straight on Bitfinex. But they sell the Bitcoin or other cryptocurrency that has a Tether pairing, right? They sell the Bitcoin, so they sell the Tether for the Bitcoin at a loss, causes the price to go up, right? Sell the Bitcoin at a loss, causes the price of Bitcoin to go down, and but I think they take it to another exchange, one that has a US dollar pairing. Okay, so they start off with Tether. That we don't know if it's backed. If for all we know, Tether is backed by Ritz crackers. Okay, he's got a big old stack of Ritz crackers. Hopefully the rats don't eat too many of them. Or the guy doesn't eat too many of them, whoever's the issuer. Ritz crackers. For all we know, Tether is backed by Ritz crackers. Okay? And so, they issue the Tether. They sell the Tether on Bitfinex for Bitcoin. They take the Bitcoin to somewhere else, say Coinbase, right? And then they sell the Bitcoin at a loss. They don't give a fuck because the Tether was free to them. That's my conjecture anyway. And so it was free to them because they didn't really have the US dollars to back it up, right? So anyway, they sell the Bitcoin at a loss. This causes the price to go down, but they sell it for US dollars, not Tether. And they take the US dollars out of the economy, and that again, this causes the volume of US dollars to get sucked out of the crypto economy again. It's kind of like repatriating US dollars back into the conventional markets. But this overall causes the market cap of crypto to go down because, again, the US dollars, the volume of US dollars being circulated against cryptocurrencies is going down because they're not using US dollars. They're doing most of their transactions, their big transactions, in Tether. And there's also been evidence and mention of entities in Russia and I believe also in China that have been using Tether specifically for the purposes of money laundering. And that's that on that end, that's like in the rumor classification. I'm not entirely certain anything goes on in Russia. I have no idea, right? I'm not Russian. So anyway, I got this article here. And I got to hand this one to CC, courtesy of Bryce Weiner. And that's a guy I'm going to miss from Twitter. Bryce Weiner. Maybe one of these days I'll have him back on the show again. That's one of those old school OGs. And many of you are probably not even familiar with Mr. Bryce Weiner. Might have to fix that. Anyway, so this is on Cointelegraph.com. By Helen Parts. So no penis. Class action accuses Tether and Bitfinex of market manipulation. This is authored approximately 9 hours ago. A New York-based legal firm has filed a lawsuit against Tether and Bitfinex, accusing them of cryptocurrency market manipulation. Quote, largest bubble in history. Roche Friedman filed a class action suit alleging that the stablecoin firm and affiliated crypto exchange have been involved in defrauding investors, manipulating markets, and concealing illicit proceeds. The firm's founding partner, Kyle Roche, tweeted on October 7th. In the tweet, Roche accused Tether and Bitfinex of creating, quote, the largest bubble in history. Filed on October 6th, the complaint document states that Bitfinex and Tether primarily accomplished a sophisticated scheme including part fraud, part pump and dump, and part money laundering. Suit alleges that backing asset claims were false. I claim they still are. In the suit, Roche Friedman argued that Tether's claim of backing the number of its Tether tokens, USDT, by equal amounts of United States dollars was a lie. Instead, the firm says that Tether issued, quote, extraordinary amounts of unbacked USDT to manipulate cryptocurrency prices. The document reads, quote, because the market believed the lie that 1 USDT equaled 1 US dollar, Bitfinex and Tether had the power to, and did, manipulate the market on an unprecedented scale to profit from boom and bust cycles they created. Damn Skippy. Tether and Bitfinex expected the lawsuit. Duh. The lawsuit filing comes 2 days after both Tether and Bitfinex published statements confirming they had become aware of an unreleased paper, quote, falsely positing that Tether issuances are responsible for manipulating the cryptocurrency market. Alleging that the paper contained, quote, baseless accusations, Tether and Bitfinex said that they will vigorously defend themselves if lawyers use the source to launch a lawsuit. Interesting. And there's no section for comments. Damn it. Anyway, so I wanted to get into the main text of this lawsuit because I think it's important to actually cover this stuff. And so this is on courtlistener.com. I pulled up the PDF on it. It says it's 195 pages, but I gotta say the text is quite large, and so we might be able to get through it. And so this is a class action complaint. Kyle Roche admission pending. Joseph M. Delich, Roche Friedman LLP, blah, 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 blah. We're not going to go through that. Plaintiffs David Leibowitz, Benjamin Leibowitz, Jason Leibowitz, Aaron Leibowitz, and Pinchas Goldstein, individually and on behalf of all others similarly situated, bring this action against iFinex Inc., BFX NA Inc., BFX WW Inc., Tether Holdings Limited, Tether Operations Limited, Tether Limited, Tether International Limited, Digfinex Inc., Philip G. Potter, Giancarlo Davicini, Ludovicus Jan Vandervelde, Reginald Fowler, Crypto Capital Corp., and Global Trade Solutions AG, collectively defendants, and allege as follows. 1. Introduction. The methods and techniques of manipulation are limited only by the ingenuity of man. Number 1. This action concerns a sophisticated scheme that co-opted a disruptive innovation, cryptocurrency, and used it to defraud investors, manipulate markets, and conceal illicit proceeds. Number 2. Part fraud, part pump and dump, and part money laundering, the scheme was primarily accomplished through two enterprises, Bitfinex and Tether, that commingled their corporate identities and customer funds while concealing their extensive cooperation in a way that enabled them to manipulate the cryptocurrency market with unprecedented effectiveness. They really ought to go to my YouTube page. I covered all of it. Number 3, founded in 2012, Bitfinex is one of the world's largest cryptocurrency exchanges, a marketplace for individuals to buy and sell various cryptocurrencies. Number 4, Tether, in the central authority over the cryptocurrency called Tether, or USDT, one of the world's first, quote, stable coins. While most cryptocurrencies are not backed by tangible assets, stablecoins, such as USDT, aim to solve the volatility inherent in cryptocurrency by pegging themselves to a tangible asset held in reserve. Number 5. Together, Bitfinex and Tether manipulated a market that, by design, is supposed to be decentralized. 6. At the heart of this scheme was Tether's claim that, quote, that the number of USD tokens in circulation will always equate to the number of dollars in its bank account. This claim enabled Bitfinex and Tether to signal to the market that there was rapidly growing demand for cryptocurrencies because each USDT printed represented another US dollar invested into the market. Number 7. This claim was a lie. It still is. 8. Tether issued extraordinary amounts of unbacked USDT to manipulate cryptocurrency prices. Because the market believed the lie that 1 USDT equaled 1 US dollar, Bitfinex and Tether had the power to, and did, manipulate the market on an unprecedented scale to profit from boom and bust cycles they created. Number 9. From September 2017 through 2018, Tether printed 2.8 billion USDT and used it to flood the Bitfinex exchange and purchase other cryptocurrencies. This artificially inflated demand for cryptocurrencies and caused prices to spike. I wouldn't say that the spike was entirely theirs. You know, there was actual demand and market participation. The indication of that was the fact that if you look at the Bitcoin network as well as other cryptocurrency networks, you could see huge spikes in the fucking traffic. That's activity happening on their blockchain. Anyway, continuing on. Number 10. As the cryptocurrency market reached a fever pitch, Tether's mass issuance of USDT created the largest bubble in human history. When it burst, over $450 billion of value disappeared in less than a month. The fallout continues to affect the cryptocurrency market, including by causing prices to be lower than they would have been but for the manipulation. Number 11. As explained below, economists estimate that from 2017 to 2018, as much as half of the growth in the cryptocurrency market was driven by Bitfinex and Tether's manipulative scheme. Number 12. In a brash display of lawlessness, Tether and Bitfinex continue to defraud the market even in the face of an ongoing investigation by the New York Attorney General, the CFTC, and the Department of Justice. Number 13. Fully aware of the incredible harm they've inflicted on the cryptocurrency market, on October 5th, 2019, Bitfinex and Tether published statements where they generally described the allegations contained herein, admitted that they fully expected to be sued, and stated that they, quote, would not be surprised if just such a lawsuit will be filed immediately or imminently. 14. Calculating damages at this stage is premature, but there is little doubt that the scale of harm wrought by the defendants is unprecedented. Their liability to the putative class likely surpasses 1.4 trillion US dollars. I believe that too. Let's see, we're on page 6 of 95. So yeah, we're going along pretty quickly. Number 2, parties. A, plaintiffs. Number 15, Plaintiff David Leibowitz is a citizen of West Palm Beach, Florida. Since July 2014, David has held a legal interest in the cryptocurrencies Bitcoin and Bitcoin Cash through his holdings in the Pantera Bitcoin Fund, Ltd. During the relevant time period, David also personally owned the cryptocurrencies Ether and Litecoin. Number 16. Jason Leibowitz is a citizen of New York, New York. During the relevant time period, Jason Leibowitz owned Bitcoin, Bitcoin Cash, Ether, Ether Classic, Litecoin, Bitcoin Gold, Ripple, Stellar Lumens, Tron, Qtum, Monero, Zcash, Dash, Augur, Neo, EOS, Waves, OMG, Cardano, NEM, IOTA, Power, Icon, and Steam. Number 17. Benjamin Leibowitz is a citizen of New York, New York. During the relevant time period, Benjamin Leibowitz owned Bitcoin, Bitcoin Cash, Ether, blah, blah, blah. I'm not going to read their fucking portfolio here. Number 18, Aaron Leibowitz is a citizen of Westchester, New York. During the relevant time period, Aaron Leibowitz owned Bitcoin, blah, blah, blah. I'm not going to read your fucking shit. Pinchas Goldstein is a citizen of Miami, Florida. B, defendants. Digfinex. Number 20. Defendant Digfinex Inc. is incorporated in and a citizen of the British Virgin Islands. Digfinex operates as the ultimate parent company of the Bitfinex Defendants, defined below, the Tether Defendants, defined below, and is a majority owner of iFinex Inc. and Tether Holdings Limited. Number 21. The shareholders of Digfinex are Ludovicus Janvinderveld, Giancarlo Davicini, Pello Arduino, Philip Potter, Stuart Hogner, and Perpetual Action Group Asia Inc. The Bitfinex Defendants. Defendants iFinex Inc., BFX NA Inc., and BFXWW Inc. are owned and operated by the same small group of executives and employees that together operate an online platform called Bitfinex for exchanging and trading virtual currency. Plaintiffs provide more detailed allegations about these defendants below, but for ease of reference, and unless otherwise noted, this complaint will refer to these defendants collectively as Bitfinex or the Bitfinex Defendants. Number 23. Defendant iFinex Inc. is incorporated in and a citizen of the British Virgin Islands. iFinex owns and operates the online cryptocurrency exchange called Bitfinex, accessible at bitfinex.com. It is also the holding company that wholly owns defendants BFXNA Inc. and BFXWW Inc. Number 24. Defendant BFXNA Inc. is incorporated in and a citizen of the British Virgin Islands. It is the entity that interfaces with U.S. customers that want to trade on the Bitfinex exchange. 25. Defendant BFXWW Inc. is incorporated in and a citizen of the British Virgin Islands. It is the entity that interfaces with non-U.S. customers that want to trade on the Bitfinex exchange. Tether Defendants. Defendants Tether Holdings Limited, Tether Limited, Tether Operations Limited, Tether International Limited are owned and operated by the same small group of executives and employees that together operate an enterprise called Tether, which is the central authority over and issuer of USDT. For ease of reference and unless otherwise noted, this complaint refers to these defendants as Tether or the Tether Defendants. 27. Defendant Tether Holdings Limited is incorporated in and a citizen of the British Virgin Islands. It is the holding company of the defendants Tether Limited and Tether Operations Limited and Tether International Limited. Limited. 28. Defendant Tether Operations Limited appears to be incorporated in and a citizen of the British Virgin Islands. It is the entity that interfaces with Tether's U.S. customers that want to trade USDT. 29. Defendant Tether International Limited is incorporated in and a citizen of the British Virgin Islands. It is the entity that interfaces with Tether's non-U.S. customers that want to trade USDT. Number 30. Defendant Tether Limited is incorporated in and a citizen of Hong Kong. Tether Limited is the entity that issues USDT. Let's see. Part 4. Individual Digifinex, Bitfinex, and Tether Defendants. 31. Defendant Ludovicus Jan Veld is the Chief Executive Officer of both the Bitfinex and Tether Enterprises. He has held this position since early 2013. Veld is one of 2 directors listed on the corporate registries of Digifinex, iFinex, and Tether Limited. Veld is also a shareholder of Digifinex and Tether Holdings Limited and is the former CEO of Digifinex shareholder Perpetual Action Group Asia. Veld is a citizen of the Netherlands. 32. Defendant Giancarlo Davasini was involved in creating Bitfinex. He is the Chief Financial Officer of Bitfinex and Tether. Davasini is the other director identified on the corporate registries of Digifinex, iFinex, and Tether Limited. He is also a shareholder of Tether Holdings Limited and Digifinex. Davasini is a citizen of Italy. In the early days of Bitfinex and Tether, Davasini posted under the username "You Are What You Know" on BitcoinTalk.org forum. Number 33. Defendant Philip G. Potter was the Chief Strategy Officer of the Bitfinex and Tether Enterprises until June 2018. He also was or is the director of Tether Holdings Limited and a shareholder in Digifinex. Potter is a citizen of New York. The plot thickens. The Crypto Capital Defendants. Number 34. Defendant Crypto Capital Corp. is incorporated in and a citizen of Panama. Crypto Capital Corp. is operated as a payment processor that marketed itself to cryptocurrency exchanges. In reality, it served as an illegal, quote, shadow bank that granted the Bitfinex and Tether Enterprises access to the global financial system without regulatory oversight. Number 35. Defendant Global Trade Solutions AG is incorporated in and a citizen of Switzerland. Probably Zug. Global Trade Solutions AG owns and operates Crypto Capital Corp. The Swiss regulatory agency FINMA placed Global Trade Solutions AG on its public warning list in May 2019. Number 36. Defendant Reginald Fowler acted as an employee, agent, or partner of Defendant, Crypto Capital Corp., and Global Trade Solutions AG. He is a citizen of the United States and a resident of Arizona. 37. For ease of reference, organizational charts of certain defendants and their various relationships to one another are attached as Exhibit 16. Yeah, what a good guess that was. He's registered in the Zug canton in Switzerland. I knew it. Jurisdiction and venue. The court has original jurisdiction over the federal claims in this action pursuant to 28 U.S.C. 1331 and 1337 and 18 U.S.C. 1964C. 39. Venue lies within this district under 15 U.S.C. 2218 U.S.C. 1965 and 28 U.S.C. 1391 because defendants resided, transacted business, were found, or had agents in this district, and a substantial portion of the alleged activity affected interstate trade and commerce in this district. 40. During the class period, defendants used the instrumentalities of interstate commerce, including interstate wires, to effectuate their illegal scheme. 41. Defendants' manipulation, conspiracy, and conduct alleged herein was in U.S. import commerce and or had direct, substantial, and reasonably foreseeable effects on U.S. domestic commerce, and such effects give rise to plaintiff's claims within the meaning of 15 U.S.C. 6A. 42. This court has personal jurisdiction over each defendant because each defendant transacted business, maintained substantial contacts, and their co-conspirators committed overt acts in furtherance of their illegal conspiracy in the United States, including in this district. The scheme was directed at and had the intended effect of causing injury to persons residing in, located in, or doing business in this district. 43. The court also has quasi-in rem jurisdiction over the defendants by virtue of their U.S. dollar accounts in New York. 4. Factual allegations. A. Cryptocurrencies and cryptocurrency exchanges. 44. A cryptocurrency is a digital asset designed to work as a medium of exchange and or a store of value. Cryptocurrencies leverage a variety of cryptographic principles to secure transactions, control the creation of additional units, and verify the transfer of the underlying digital assets. 45. Bitcoin was the world's first decentralized cryptocurrency. It is also the largest and most popular cryptocurrency, with a market cap of $147 billion as of October 5th, 2019. Bitcoin spawned a market of cryptocurrencies that, together with Bitcoin, have a current market cap of $219 billion. 46. At its core, Bitcoin is a ledger that tracks the ownership and transfer of every Bitcoin in existence. This ledger is called the blockchain. 47. Instead of a bank account number, each Bitcoin user has a public key that is the address used to receive Bitcoin from others. Every public key can be readily identified on the Bitcoin blockchain, along with the number of Bitcoins associated with that particular public key. 48. There are two methods of acquiring Bitcoin. Actually, there are more than two, but we won't go there. 49. The first is to mine it. Because there is no centralized authority that keeps track of Bitcoin spending, the Bitcoin protocol issues new Bitcoin to individuals that expend computing power to update its ledger. This process is called Bitcoin mining. 50. The second is to get it from someone else. Practically, this can be accomplished by receiving Bitcoin as a gift or by purchasing it. 51. Online cryptocurrency exchanges are one place to purchase Bitcoin. Cryptocurrency exchanges are similar to traditional stock or commodities exchanges in that they provide a convenient marketplace to match buyers and sellers of virtual currency. 52. Early on, Bitcoin was the only cryptocurrency available on exchanges. As cryptocurrencies grew in popularity, however, exchanges began listing other cryptocurrencies as well. 53. As the cryptocurrency market grew, trading volumes on exchanges grew as well. In early 2013, daily Bitcoin trading volumes hovered between $1 million and $25 million. By the end of 2017, daily Bitcoin trading volumes ranged between $200 million and $3.8 billion. B. Bitfinex. 54. Bitfinex was publicly announced in 2013 when its chief technology officer, Raphael Nicoli, posted about its creation on a popular online cryptocurrency forum called bitcointalk.org. 55. Bitfinex is now one of the largest and least regulated cryptocurrency exchanges in the world. That's a good thing, honestly, I think. While many exchanges only facilitate crypto-to-crypto transactions, Bitfinex is one of relatively few that allows users to deposit and withdraw fiat currency. 56. Bitfinex has made conflicting statements about its operational locations. Some statements identify its principal place of business as Hong Kong, China. Others only identify offices in Taiwan. In 2019, Bitfinex's general counsel swore that, quote, neither Bitfinex nor Tether has a single headquarters or home office. Rather, the companies have decentralized operations in different countries, including Hong Kong, Switzerland, and Taiwan. Today, Bitfinex's website only identifies London and Taiwan locations. 57. In June 2016, the Commodities Futures Trading Commission, the Commission, fined Bitfinex $75,000 after finding that, quote, Bitfinex engaged in illegal off-exchange commodity transactions and failed to register as a Futures Commission merchant, in violation of Section 4A and 4D of the Commodities Exchange Act. 58. The Commission also found that, quote, Bitcoin and other virtual currencies are encompassed in the definition and properly defined as commodities and are therefore subject as a commodity to applicable provisions of the Commodity Exchange Act and regulations. Not entirely. C. Tether. 59. Tether is the entity in control of the cryptocurrency USDT, one of the first stablecoins. Stablecoins are cryptocurrencies designed to maintain a consistent value relative to one or more assets, such as gold or fiat currency. Unlike the underlying asset it represents, a stablecoin can be transferred between parties across borders instantaneously with minimal cost. 60. Stablecoins attempt to address illiquidity and price volatility in the cryptocurrency market. Indeed, price volatility is one of the main obstacles to widespread adoption of cryptocurrencies as a means of exchange and store of value. Actually, that claim is bullshit. As a former CEO of Goldman Sachs put it, quote, "Something that moves up and down 20% in a day doesn't feel like a store of value." Actually, it does, especially when you look at the chart and figure within the next couple of days it's going to hop up another 40% in value. Then all of a sudden you don't mind taking that little divot. Next, 61. Unlike Bitcoin, USDT cannot be mined. Instead, Tether unilaterally controls the creation of new USDT. 62. Tether's beginnings trace back to early July 2014 when the startup called Realcoin claimed it had produced the first stablecoin that, quote, would be backed 1-to-1 by a fully auditable reserve of dollars. Realcoin was founded by investor Brock Pierce. Its first CEO, Reeve Collins, and software engineer Craig Sellers. According to Collins, by issuing real coins, they were, quote, digitizing the dollar and giving that digital dollar access to the Bitcoin blockchain. 63. Collins stated that real coins would be, quote, introduced or removed from circulation depending on whether dollars are being added or redeemed. He also claimed that Realcoin had already found a major banking partner, that it would maintain a real-time record of its dollar-based reserves, and that its lawyers were working to obtain U.S. money transmitter licenses from those states that require them. 64. In November 2014, Realcoin renamed itself Tether and rebranded Realcoins as, quote, Tether, or USDT, the ticker under which the token is listed on cryptocurrency exchanges around the world. 65. In September 2014, 2 months prior to the rebranding, Defendants Potter and Devasini incorporated Tether Holdings Limited in the British Virgin Islands. 66. 1 month later, on October 6, 2014, Tether issued its first batch of stablecoins, quote, printing 100 USDT, allegedly equivalent to $100 US. 67. After the rebranding, Collins reiterated the Realcoin promise. He publicly asserted that, quote, that the number of USDT in circulation will always equate to the number of dollars in its bank account, and, quote, that there are no pegs or formulas that complicate the process for its partners. He was unequivocal about the implications, quote, when you want to redeem them, we issue you cash. 68. November 2014 rebranding also announced that Tether had formed, quote, new partnerships in the Bitcoin space, including agreements with Hong Kong-based Bitcoin exchange Bitfinex. 69. The November 2014 announcement did not reveal, though, that it was Devasini and Potter, i.e. Bitfinex's CFO and CSO, that had created and have controlled Tether's holding company since 2014 in September. Let's see here, there's the little... That's interesting. So Tether Holdings Limited has Devasini as shareholder of it. Potter Philip Grzak? That's really weird. And he's the director of it. Oh, interesting. Got a little diagram here. 70. Nor did it reveal that Veld and Devasini, i.e. Bitfinex's CEO and CFO, had similarly incorporated Tether Limited in September and served as its only directors. 71. An archived copy of the Tether website from March 2015 identified Potter and Devasini as, quote, advisors and did not identify Veldy at all. 72. The fact that the same individuals in control of Bitfinex, a cryptocurrency exchange, were also secretly in control of Tether, a cryptocurrency supposedly backed by the US dollar, is concerning even without strong evidence of wrongdoing contained herein. 73. This overlapping control structure remained largely concealed from the general public for over a year until the Paradise Papers leaked in November 2017. 74. Similarly concerning is that USDT is always initially transferred from Tether's Treasury wallet to Bitfinex and not directly to any other exchanges. 75. Tether's Treasury wallet is the account solely controlled by Tether in which all USDT are created or destroyed. All new USDT are first sent to the Tether Treasury after being created. Any redeemed USDT must similarly be transferred back to the Treasury to be revoked, i.e. destroyed. 76. Tether's exclusive relationship with Bitfinex for initial USDT issuances means that Bitfinex was often Tether's only customer. 77. As of this filing, USDT is reportedly the most widely used cryptocurrency in the world by trading volume, surpassing even Bitcoin. Bitfinex and Tether's chief technical officer recently boasted that USDT possesses a near-perfect monopoly on the stablecoin market by accounting for 98.7% of worldwide stablecoin trading volumes. 78. It is also the fourth largest cryptocurrency in the world, with a market cap of over $4.1 billion, based on the over 4.1 billion USDT in circulation, which should mean that Tether holds over 4.1 billion US dollars on deposit in its bank accounts. D. The history of Tether's 1-to-1 USDT-USD guarantee. 79. Throughout its existence, Tether has marketed USDT as enabling traders to move in and out of positions across different cryptocurrencies and different cryptocurrency exchanges. Its pitch is that USDT's reliable price, coupled with its digital representation on the blockchain, offers the best of both worlds. It is stable and safe, like the US dollar, while being easily transferable and divisible, like other cryptocurrencies. 80. USDT's value was necessarily derived from Tether's guarantee that each USDT was backed by $1 US held in reserve. 81. Up until March 20th, 2015, Tether's website stated that USDT is backed 100% by actual fiat currency assets in our reserve account and always maintains a 1-to-1 ratio with any currency held. For example, 1 USDT equals 1 US dollar. With almost zero conversion and transfer fees, USDT is redeemable for cash at any time. 82. During that same time, Tether's website also claimed that, quote, Tether currencies are essentially dollars, euros, and yen formatted to work on the blockchain. USDTs also always hold their value at 1-to-1 to their underlying assets. 83. On June 17, 2016, Tether released a white paper further assuring the world that each USDT was backed by actual assets. It promised that, quote, each USDT in circulation represents $1 US held in our reserves, i.e. at a 1-to-1 ratio, which means the system is fully reserved when the sum of all USDT in existence at any point in time is exactly equal to the balance of USDT held in our reserve. 84. The white paper also referenced Tether's commitment to maintaining the guarantee of 100% redeemability and promised that USDT may be redeemable/exchangeable for the underlying fiat currency pursuant to Tether Limited's terms of service, or if the holder prefers, the equivalent spot value in Bitcoin. 85. Finally, it included the chart below depicting how USDT are created when fiat is deposited and when withdrawn from circulation when redeemed for fiat. It gives us a nice little diagram. 86. A year later, on April 5, 2017, during court proceedings against Wells Fargo, Veldy filed a declaration under penalty of perjury explaining that customers who want to purchase virtual currency through Bitfinex must deposit US dollars or USDT into their Bitfinex account and in exchange receive an equivalent amount of virtual currency until they ask Bitfinex to remit back to the US dollars they deposited. Likewise, customers who want to purchase USDT through Tether must deposit US dollars on their Tether account and in exchange receive an equivalent amount of USDT until they ask Tether to remit back to US dollars they deposited. For these systems to work, customers depend on Bitfinex's and Tether's ability to send back to them the US dollars that they deposited with Bitfinex or Tether. 87. Until February 2019, Tether's website continued to represent that every USDT in circulation was backed 1-to-1 by traditional currency held in our reserves. So, 1 USDT is always equivalent to 1 USD. Now, one thing, if it's equivalent to 1 USD and it's also equivalent to 1 yen or 1 euro, what if there was a differential in the exchange rate or the relative value of US dollars and euros? So say the US dollar is $1, right? But euros are like $1.12. It would be worth it to you to buy the Tether in US dollars and then sell the Tether in euros, because then you would make 16 cents per. I wonder if anybody's doing that. If you're not doing that, you probably should take a lot of money from Tether. 88. On March 4th, 2019, with Tether under criminal investigation by the Department of Justice, the CFTC, and the New York Attorney General, Tether's guarantee was altered to instead assert that every USDT was 1-to-1 backed or 1-to-1 pegged to the dollar and 100% backed by reserves that from time to time may include other assets. 89. As of August 17, 2019, representations that number 1, outstanding USDT are backed 1-to-1 by traditional currency, and number 2, that USDT is always equivalent to 1 US dollar, and number 3, that users can freely deposit, trade, and withdraw USDT and convert these to fiat, continued to appear on Bitfinex's website. In the claim, there is outstanding Tethers are backed 1-to-1 by traditional currency held in Tether Limited's reserves. Accordingly, 1 USDT is always equivalent to 1 US dollar. Learn more about the benefits of using Tethers here. Verified Bitfinex users can freely deposit, trade, and withdraw USDT and EURT, converting these to fiat and vice versa through means of USDT/USD and EURT/Euro trading pairs on our platform. Fiat on Bitfinex. Verified users on Bitfinex can deposit, trade, and withdraw both fiat and Tether-denominated USD, whilst USDT-USD trading pairs exist to allow for direct conversions between the two. 90. Tether's counsel represented to the Office of the New York Attorney General that issuance of USDT occur when an investor has requested to purchase USDT by depositing US dollars with Tether, the company, or by depositing US dollars with a trading platform that is authorized to accept dollar deposits in exchange for USDT. 91. In spite of these representations, which have shifted in form but not in substance over a period of at least the last 5 years, USDT are not backed one-to-one by US dollars, any other currency, or even other assets. As explained in detail below, Tether's one-to-one USDT/USD guarantee is a lie that has been leveraged by Tether and Bitfinex to monopolize the stablecoin market and thereby manipulate the cryptocurrency market. Cryptocurrency market is susceptible to manipulation. Of course it is. Duh. Every other is too. Illiquid markets such as Bitcoin are very easy prey to manipulation. That was the defendant Giancarlo Devasini, December 5th, 2012. 92. Bitfinex and Tether's plans were aided in part by the inherent price volatility and lack of regulation in the cryptocurrency market. No, that was just because somebody decided to do it. It doesn't mean that it had anything to do with the regulation. Anyway, continuing. This volatility has left the cryptocurrency highly susceptible to price manipulation. 93. Volatility is caused by a variety of factors, including the fact that regulatory agencies are still assessing how best to apply existing regulatory frameworks to this market. That's a bunch of bullshit, dude. That's a bunch of bullshit. 94. Volatility is also partly due to the fact that many cryptocurrencies are commodities, not stocks. They don't sell products, earn revenue, employ individuals, or return dividends, qualities that would make them easier to value. And, unlike commonly traded commodities like gold or silver, the cryptocurrency asset class is comparatively new and doesn't have a long trading history to help investors understand the factors underlying its market demand. Actually, those are things for you to find out before you even bother to get into cryptocurrency. And you know what? We're going to stop off right there. My throat's getting a little raspy here. But we'll continue on after we're on the other side of the music break here. But we're on page 31 of 95. So, yeah, we're breezing through it pretty quick. But let's go ahead and throw back down into some music here. And as far as where to go here, let's go with a little bit of Machine Head Block here on Coin Metal. And that was Philistine Philosophies by Sixth. Yeah, and so let's go ahead and get back into this thing here. If I can find it. Drifted away from it for a moment and fucking disappeared on me. Anyway, so here it is. We're on number 95 on page 31 of 95. And I don't know, we may or may not get through the whole thing today, but I think this is pretty good material. We gotta keep going. 95. Lastly, Volatility is caused by a lack of significant price anchors that come with large-scale institutional capital investments. Oh, that's a bullshit assertion. 96. Because these conditions have today created the environment with significant price volatility, the cryptocurrency market is highly susceptible to price manipulation. Not true at all. 97. One infamous example of such manipulation took place between 2013 and 2014 and was accompanied with an automated trading program coined WillyBot. Now, talking about Mt. Gox there. 98. Automated trading programs like WillyBot enable traders to execute manipulative tactics with precision. These programs are commonly referred to as bots. 99. Between 2013 and 2014, Mark Karpelès, the owner and operator of failed cryptocurrency exchange Mt. Gox, implemented the WillyBot to successfully manipulate Bitcoin's price from about $150 to over $1,000 in less than 3 months. When Mt. Gox finally suspended trading due to its insolvency, the price fell to $500. 100. Before its collapse, Mt. Gox was the biggest trading platform for Bitcoin and was handling 70% of all Bitcoin trading worldwide. Mark Karpelès was its sole owner and operator. 101. On May 25, 2014, an anonymous trader posted a report titled, quote, "The WillyBot Report," or the Willy Report, proof of massive fraudulent activity at Mt. Gox and how it has affected the price of Bitcoin. 102. The Willy Report provided detailed analysis of Mt. Gox's leaked trading logs and concluded that someone had programmed a bot to buy 10 to 20 Bitcoin every 5 to 10 minutes. The report concluded that this, quote, enormously affected the price of Bitcoin and played a key role in its rise to $1,000. 103. Since then, additional academic research has reached the same conclusion. In an article published last year, one team found that, quote, suspicious trading activity of a single actor was the primary cause of the massive spike in the USD/Bitcoin exchange rate, in which the rate rose from around $150 to over $1,000 in just 2 months in late 2013. 104. The researchers observed that the Willy account became active on September 9, 2013 and continued to trade until their data cut off on November 30, 2013. Because Karpelès owned and operated the exchange, quote, Willy never actually had to pay for Bitcoin, but nonetheless bought around 268,132 for just under $112 million during that time period. One passage captures their finding particularly well. Separating the days on which Willy was active from those he was not reveals a dramatic difference. In the case of Mt. Gox, the average US dollar Bitcoin rate increased by $21.85 on the 50 days Willy was active. It actually fell by 88 cents on average on days when other exchanges when Willy was not active. The same dramatic difference holds for the other exchanges as well. These results are striking and suggest that Willy's activity could have caused large jumps in the exchange rate on all of the exchanges. 105. While it was initially unclear who controlled Willy, who controlled the WillyBot, Karpelès eventually admitted to controlling it at his trial in 2017. 106. The WillyBot scheme underscores how control over an exchange and the opportunity to make trades with non-existent money allowed a single individually to dramatically influence cryptocurrency prices, even without sophisticated manipulation tactics like wash trading, match trading, and spoofing. The simple power to acquire cryptocurrencies with non-existent US dollars interferes with the natural price discovery process and misleads market participants. How Tether and Bitfinex caused the 2017 Bitcoin bubble. This is going to be the largest bubble of our lifetimes. You can make a whole lot of money on the way up, and we plan on it. Michael Novogratz, September 26, 2017. 107. Bitfinex and Tether leveraged USDT and their control of Bitfinex exchange to inflate one of the largest bubbles in history. 108. From 2014 to 2016, Bitcoin's price fluctuated between $200 and $800. By the end of 2016, Bitcoin as well as other cryptocurrencies began to see significant gains. 109. On March 1, 2017, the price of Bitcoin had climbed to $1,200. Throughout the first half of 2017, Bitcoin continued to experience significant gains, rising just above $2,000 by July. 110. From there, Bitcoin's price rose rapidly until December 17, 2017. It reached a record high of nearly $20,000. By then, Bitcoin's market cap was nearly $327 billion, roughly the size of Amazon's market cap during the same period. 111. Then the market crashed. 112. Between January and February 2018, Bitcoin's price fell to $6,200. The Bitcoin market continued to hemorrhage throughout 2018. Roughly 1 year from its previous high, Bitcoin's market cap was only $62 billion, or $3,500 per Bitcoin. 113. The disappearance of $265 billion in Bitcoin wealth was the result of Bitfinex and Tether propping and popping the largest bubble in history. Actually, I don't believe that. I believe one of the things that happened, and you can even check this on the Bitcoin network. If you look at it, you can see the transaction volume just spike. Another thing that spiked during that time was transaction fees. And see, I think what happened is that the market just fucking rose and rose and rose because people were willing to pay the fees. And then they hit a point when it was no longer worth it to them to pay those fees. And they switched to other cryptocurrencies instead. And we saw a reciprocating wave up on those and a decline on the price of Bitcoin. Alright, I think that's one of the things that people kind of ignore. There were other factors going on. You know, you can't just look at Bitcoin and think that everything that's happening in the Bitcoin space or with Bitcoin in particular is governing the price of it. There are other cryptocurrencies for it to compete with, both for mining resources and for US dollars. Continuing on. 114. The chart below conveys the scale of this event by comparing Bitcoin's price or relative price inflation with other infamous bubbles. I don't see. Starting blah blah blah. Yeah, other bubbles. Big whoop-de-doo. 115. The economic devastation was not confined to Bitcoin. As Bitcoin fell, so did the rest of the cryptocurrency market it had spawned. The combined market capitalization of all virtual currencies as of January 6, 2018 was roughly $795 billion. By February 6, 2018, the total value had dropped to $329 billion. CFTC versus McDonald, 208 or 287. apparently that's some sort of case. 116. As explained below, USDT was not backed one-to-one by US dollars. Bitfinex and Tether issued billions of unbacked USDT to manipulate the price of Bitcoin and other cryptocurrencies. 117. This scheme enabled Bitfinex and Tether to buy massive amounts of Bitcoin without paying for it, just like Carpelli's in 2013 and 2014, and profit outrageously from the boom and bust cycles they created. Professor Griffin's analysis demonstrates Tether and Bitfinex manipulated the price of Bitcoin. 118. In June 2018, Professor John Griffin and Eamon Shams published an analysis of USDT issuances on SSRN entitled, "Is Bitcoin Really Untethered?" Hereinafter the Griffin article. 119. The Griffin article's main conclusion is that USDT-driven price manipulation of Bitcoin accounted for as much as half of Bitcoin's price gains during the period of March 1st, 2017 through March 31st, 2018. 120. The Griffin article examined two alternative hypotheses to explain how Tether issuances during this time, how Tether issued USDT during this time frame. 121. The first hypothesis is that Tether issued USDT in response to legitimate demand for a pegged digital currency. Under this hypothesis, USDT is fully backed by US dollars. This hypothesis is called the pulled hypothesis because investors are pulling USDT into the market. 122. The alternative hypothesis is that Tether issues USDT as part of a supply-driven scheme to manipulate the price of Bitcoin by purchasing it with unbacked USDT. This hypothesis is called the push hypothesis because Tether is issuing USDT independently of demand and pushing it into the market. 121. Since Tether controls USDT issuance, Bitfinex and Tether can set strategic price floors for Bitcoin that trigger buy orders executed with unbacked USDT and costlessly ensure the price of Bitcoin never falls below the predetermined floor. Like the Willy bot, the persistent purchases would result in significant price increases over the long term. 124. Large USDT issuances and Bitcoin purchases would normally have an inflationary effect and that decreases the relative value of USDT relative to Bitcoin, but the reserve guarantee enforces a floor on USDT prices, which causes Bitcoin's price to increase relative to the US dollar. Thus, the issuance of USDT signals an artificial demand for Bitcoin to the market. 125. Under the push scheme, as Bitcoin price rises, Bitfinex and Tether can cash out by selling the Bitcoin they've acquired for US dollars, likely at a slower pace and on opaque channels with less price impact than their initial buying patterns. 126. In other words, Tether and Bitfinex purchase Bitcoin with fake USDT to draw in momentum investors, then cash out by selling it to them for real US dollars. God damn, where have you heard that before? Shit. 127. If anyone ever asks questions, Tether can convert cryptocurrencies to US dollars or use its US dollar profits to retroactively provide reserves for USDT and claim those reserves were there all along. 128. To determine which hypothesis was valid, Griffin examined over 200 gigabytes of transactional data from over 10 different sources. The public nature of the blockchain meant that Griffin was able to analyze a significant amount of USDT transactions to date, including issuances. 129. Griffin first confirmed that Tether sends all new USDT to Bitfinex, and that Bitfinex largely sends USDT to two other exchanges, Poloniex and Bittrex. For example, by February 2018, Bitfinex had sent Poloniex 2.99 billion USDT. 130. Griffin next determined that when Bitcoin prices decreased, USDT was issued and used to purchase Bitcoin, but that this was not mirrored by redemptions when Bitcoin prices were increasing. He concluded that this indicated USDT was used to fend off downturns in Bitcoin prices rather than benign market-making activities. 131. In other words, Tether and Bitfinex buy Bitcoin with USDT when prices drop to keep prices artificially high. 132. Griffin next analyzed Tether issuances between March 1, 2017 to March 31, 2018 to test how strongly these issuances correlated with Bitcoin price increases. He found that the timing of these issuances strongly correlated with half of all Bitcoin price increases that year. 133. Griffin concluded his findings were, quote, most consistent with supply-driven manipulation hypothesis that Tether was pushing USDT into the market. 134. As Griffin explained in an interview with Bloomberg, quote, first, USDT are created by the parent company Tether Ltd, often with large chunks, such as 200 million. Almost all new coins then move to Bitfinex. When Bitcoin prices drop when Bitcoin prices drop soon after the issuance, USDT at Bitfinex and other exchanges are used to buy Bitcoin in a coordinated way that drives up the price. 135. The chart below depicts this correlation between USDT issuances and Bitcoin price increases. 136. Griffin also observed evidence consistent with the use of, quote, round number thresholds as price anchors to set a price floor in order to, quote, stabilize and drive up the price of Bitcoin. The premise of a price anchor is that, quote, if investors can demonstrate a price floor, then they can induce other traders to purchase. Other studies corroborate the Griffin article's conclusions. 137. After a few months prior to the publication of the Griffin article, a report with the title, quote, Quantifying the Effect of Tether, quote, the Tether Report, was published online. Similar to Griffin's analysis, the Tether Report concluded that, quote, Tether printing moves the market appreciably. 48.8% of Bitcoin's price rise in the period studied occurred in the 2-hour periods following the arrival of 91 different Tether grants to the Bitfinex wallet. The report warned that, quote, Bitfinex withdrawal/deposit statistics are unusual and would give rise to further scrutiny in a typical accounting environment. 138. In its analysis of Bitcoin price data and USDT transactions, the report found that, quote, the price data suggests Tether may not be mined independently of Bitcoin price and may be created when Bitcoin is falling. It also rejects the notion that Tether is not having a great influence on the Bitcoin price. One interpretation of the data suggests that Tether could account for nearly half of Bitcoin's price rise, not even allowing for follow-on effects and the psychological effects of rallying the market repeatedly. The transaction data could trigger extreme scrutiny and audits due to questionable patterns of transactions. 139. On October 3, 2019, Token Analyst, a cryptocurrency researching company, quote, on a mission to bring transparency to the decentralized economy, similarly concluded that Tether's issuance of USDT correlated with upward Bitcoin price movement. 140. Token Analyst analyzed the, quote, relationship between Bitcoin price and USDT supply over the course of the history and determined that, quote, on days where USDT ERC20 is minted, 70% of the time the price of Bitcoin moves up, and, quote, on days where USDT Omni is mined, 50% of the time Bitcoin price moves up. 141. On July of 2018, Dr. Gerard Martinez reviewed the Griffin article. After walking through the relevant evidence, Dr. Martinez concluded that, quote, the statistics support the theory that Tether Limited and Bitfinex corporations used Tether to buy Bitcoin in key occasions during the meteoric rise of Bitcoin prices of 2017 and beginnings of 2018, that these corporations would print Tether right after transient Bitcoin price dips, that Tether Ltd would then buy Bitcoin with freshly minted Tether and would promote the creation of a fraudulent bullish market which would attract more investors to buy Bitcoin, contributing this way to increase the bubble momentum effect. And then, as the penultimate part of the strategy, Tether Limited would send freshly bought Bitcoin to their accounts in Bitfinex. Further evidence of Bitfinex and Tether's scheme. 142. These empirical conclusions are reinforced by other evidence demonstrating that Bitfinex and Tether actively engaged in coordinated market manipulation. 143. For example, in April 2017, Potter publicly discussed Bitfinex plans to create, quote, a private market for the equity shareholders to trade among themselves. Bitfinex today offers an order type called, quote, hidden, in which the hidden order does not appear on the publicly visible order book. These are precisely the sort of opaque channel hypothesized by Griffin as a mechanism for selling off Bitcoin without crashing the price. 144. The hidden market is entirely consistent with a report published by the New York Attorney General finding that Bitfinex fosters an environment ripe for abuse, despite the fact that trading by platform employees poses a conflict of interest. Bitfinex does not provide any restrictions on employee trading. 145. Furthermore, in June 2014, 1 month after the Willie report about Mt. Gox was published, Devasini all but admitted that he was working on a Willie bot of his own to drive the price of Bitcoin to $10,000. 146. The ability to implement a trading bot like the Willie bot is corroborated by a report from the New York Attorney General finding that Bitfinex offers a number of special order types that are only useful to professional automated traders using sophisticated algorithmic strategies where orders can be submitted and canceled automatically in response to market signals not visible or even available to market traders, to regular traders, that is. 147. As described more below, see Infra Part 4G, Bitfinex and Tether's purported ability to issue hundreds of millions of USDT at the same time, their longtime banking relationships and U.S. correspondent accounts access were terminated, is equally alarming. Indeed, in the midst of this liquidity crisis, Devasini virtually admitted to manipulating the price of Bitcoin. In October 2018, Devasini wrote to a crypto capital representative, quote, "Please understand, all this could be extremely dangerous for everyone, the entire crypto community. Bitcoin could tank below 1,000 if we don't act quickly." 149. In other words, Tether ran its printing press to issue an asset supposedly backed by US dollars at a time it was losing access to US dollar clearing. This makes no sense unless Tether issued unbacked USDT despite its 1-to-1 guarantee. 150. Further corroboration that USDT is being issued without any real controls in place is demonstrated by the fact on July 13, 2019, Tether accidentally issued 5 billion USDT and then revoked it in the span of just 20 minutes. Chief Technical Officer Arduino attributed this to an issue with the token decimals. 151. On October 15, 2018, the market registered concern that Tether did not have full reserves it claimed. A massive sell-off caused the price of USDT to drop as low as 85 cents. 152. On November 20, 2018, Bloomberg reported that the DOJ's criminal probe was coordinating with the CFTC and that among the issues the Justice Department is examining is how Tether Ltd. creates new coins and why they enter the market predominantly through Bitfinex. On November 27, 2018, the New York OAG subpoenaed Bitfinex and Tether. 154. The DOJ's criminal probe focused on Bitfinex and Tether to determine if the 2017 cryptocurrency rally was, quote, fueled in part by price manipulation. 155. The issuance of USDT for price manipulation appears to have continued to the present day. The chart below depicts the strong correlation between USDT issuance and the uptick in 2019 Bitcoin prices. G. How bank fraud and money laundering with crypto capital made price manipulation of the cryptocurrency market possible. Being in the Bitcoin business is really about playing cat and mouse with the correspondent banks. The problem with becoming big is that we can't fly under the radar anymore. Philip Potter, Bitfinex CSO. 156. As described below, access to the U.S. financial system was an essential component of the defendant's scheme. Indeed, the entire premise of Tether depends on its use of the U.S. financial system, i.e. U.S. dollar deposits, to back its manufactured digital assets. 157. To facilitate its access to U.S. dollars, Tether and Bitfinex partnered with a Panamanian entity called Crypto Capital Corp. 158. As conventional banks began shutting Tether and Bitfinex accounts down for money laundering and other compliance issues, Tether and Bitfinex became even more enmeshed with crypto capital and a complicated shell game of money laundering. 159. Inexplicably, in the face of this growing pressure, Tether kept its printing presses hot. Indeed, it often issued large amounts of USDT right as it lost access to US dollar banking relationships. 160. By early 2018, crypto capital was purportedly in control of over $1 billion of Bitfinex funds, without a single written agreement having existed over their 4-year business partnership. 161. Much of the conduct described below is criminal. The crimes committed by Tether, Bitfinex, Crypto Capital, and their executives include bank fraud, money laundering, monetary transactions derived from specified unlawful activities, operating an unlicensed money transmitting business, and wire fraud. 162. Indeed, Bitfinex and Tether executives publicly discussed violating many of these laws in the past and expressed their intent to continue doing so in the future. Overview of U.S. correspondent banking. 163. To engage in U.S. dollar transactions, Bitfinex and Tether required either number 1, a U.S. bank account, or number 2, an account with a bank that maintains its own correspondent account with a U.S. bank. In the second scenario, the correspondent account serves as an intermediary and clears the U.S. dollar transactions. 164. Money never actually moves in cross-border transactions. In order to facilitate transfers in other currencies, banks maintain, quote, correspondent accounts at foreign banks. Quote, oh shit. I scrolled too far. Typically, foreign banks are unable to maintain branch offices in the United States and therefore maintain an account at a United States bank to effect dollar transactions. 165. To send a cross-border transaction in U.S. dollars, a series of bank accounts are credited or debited accordingly. The graphic below depicts a typical U.S. dollar transaction in which number 1, Bitfinex instructs its bank to wire U.S. dollars to a customer located in the United Kingdom. Number 2, the Taiwanese bank debits Bitfinex's account and instructs its U.S. correspondent to process the transaction. Number 3, the UK correspondent is instructed to debit the account of the Taiwanese correspondent and credit the account of the UK bank. Number 4, the UK bank is instructed to credit the customer's account. Number 5, the UK customer grants access to the funds. 166. Access to a U.S. correspondent account is essential to international transactions in U.S. dollars. 167. For the correspondent bank, these transactions are riskier from an anti-money laundering perspective because the originator and beneficiary are one step removed from the bank. Money launderers often capitalize on this disconnect by using shell companies to obscure the true counterparties even more. 168. This is hardly a secret. The FBI recently told Congress that the, quote, pervasive use of shell companies, front companies, nominees, or other means to conceal the true beneficial owners of assets is a significant loophole in this country's anti-money laundering regime. Yeah, too fucking bad. U.S. correspondent banking is essential to Bitfinex and Tether. 169. Because Bitfinex and Tether are needed to accept U.S. dollars, convert illicit gains into U.S. dollars, as well as honor customer withdrawal requests for U.S. dollars, access to U.S. correspondent banking was critical to the defendant's manipulation scheme. 170. In fact, as of April 2017, Bitfinex and Tether told a U.S. federal court that U.S. dollar transactions were the only types of transactions they engaged in with customers. Quote, Bitfinex can receive or remit only US dollars for customers' purchases of virtual currency, and that, quote, Tether can receive or remit only US dollars for customer purchases. 171. The Bitfinex and Tether defendants made these statements in a lawsuit they filed against Wells Fargo when it terminated its correspondent banking services. 172. Statements made by Bitfinex and Tether in that lawsuit underscore just how essential U.S. correspondent access was to their operations and how losing it should have stopped their ability to operate and issue USDT. Specifically, they stated that Wells Fargo's decision to suspend outgoing wire transfers in U.S. dollars from plaintiffs' correspondent accounts presented an existential threat to their businesses, and that if they, quote, could not remit to U.S. customers U.S. dollars belonging to their customers, businesses would be crippled and, quote, brought to a standstill. On or around 173. On or around November 28, 2017, Phil Potter opened new business accounts for Digfinex and iFinex at the New York branch of Metropolitan Commercial Bank. On December 20, 2017, Potter opened another new account at New York branch of Metropolitan Bank on behalf of Tether Holdings Limited. On or around February 16, 2018, Potter opened more new accounts at the New York branch of Signature Bank on behalf of Digfinex and iFinex. 174. These accounts demonstrate Bitfinex and Tether's dependency on the U.S. banking system and on New York banks in particular. 175. But as explained below, these specific accounts were not viable for the defendant's general operations. This was either because the banks could not provide the necessary correspondent banking services, or because a history of account closures had caused Bitfinex and Tether to no longer even attempt to operate their business openly through regulated banks for fear the accounts would be shut down. Bitfinex and Tether's cat and mouse games. 176. Early on, Bitfinex and Tether utilized Taiwanese banks that maintained U.S. correspondent accounts at Wells Fargo. 177. On March 31, 2017, Wells Fargo stopped providing correspondent banking services for Bitfinex and Tether. 178. 2 weeks after being cut off by Wells Fargo, on April 12, 2017, Potter told the cryptocurrency trading community, Whale Pool, that, quote, it was getting harder and harder to move money around. 179. Potter went on to explain that everybody banking offshore, quote, is in some sort of don't ask, don't tell relationship with their banks, and that the U.S. banks were exiting the dollar clearing business because many banks had been held accountable for their actions as correspondents in a lot of other money laundering and criminal cases, and that money laundering is their biggest concern. 180. Potter clarified, though, that, quote, the problem here was not really Wells Fargo, it was the system. He then described Bitfinex's past efforts to evade the system of money laundering laws banks are required to comply with, and expressed Bitfinex's commitment to evading them in the future. Quote, there are other correspondent banks that won't do business with us. Wells Fargo just happens to be the last one available to us with our banks in Taiwan. We have a lot of other tricks. Being in the Bitcoin business is really about playing cat and mouse with the correspondent banks. It's always been that. The problem with becoming big, and also we have massive balances at the banks, is that Bitfinex can't fly under the radar anymore. Right now in Taiwan, there is a moratorium on banks opening up new offshore accounts. That's an example. If we wanted to register some new corporate entities, move some money around, things that we could normally do, all that is slowed down right now. 181. In another discussion from the same time period, Potter said, quote, "We've had banking hiccups in the past. We've just always been able to route around it or deal with it, open up new accounts or what have you, shift to a new corporate entity, lots of cat and mouse tricks that everyone in Bitcoin industry has to avail themselves of." And you know what? We're going to cut that off right there. So yeah, this depicts a lot of substantial evidence backing up the idea that Tether and iFinex and Bitfinex were operating fraudulently, and that their fraudulent operations impacted pretty much everybody in the crypto space, and probably even a lot of people in the fiat space as well. But I think when everything is said and done, what we're going to find out is that there have been a lot of institutional players involved at this level. And as a matter of fact, there is not a single stablecoin that has actually endured a real audit of their reserves. Not a single one. I think this is one of the reasons why Circle has been kind of cutting back on USDC, although I think there's still some interest in it. Or, I mean, it's still circulating and whatnot. But in the longer term, I think they are going to terminate that project. Because I suspect that, you know, Bitfinex, iFinex, these guys are just, they're either former legacy market participants. I've asserted on multiple occasions that they're basically like the cryptocurrency equivalent of ISIS working for the Federal Reserve, because these are the only kind of entities that get that stamp of approval, that, you know, that implicit, you know, yes, no problem, you know, that everything is fine. You know, the Federal Reserve gets that kind of deference, but I wouldn't expect that any cryptocurrency company, including Bitfinex specifically because of their claims to backing in US dollars, to get that level of deference in any space. You know, I mean, we're at least getting a picture in this lawsuit that these entities have had massive issues with regard to the legacy banking market. You know, that they've opened accounts and then the accounts get terminated. And they open new accounts and those accounts get terminated. And they open new accounts and those accounts get terminated. You know, and it's because of the same thing. It's because, you know, too much of their dark money is getting noticed by the regulators. Because, you know, I'd be willing to bet that all of the institutional players that I'm talking about are participating willingly and knowingly, because it's worth a lot of money. I mean, when you think about this scam, I mean, there's plenty of incentives to participate in it. But when you think of it from the perspective of a legitimate bank, at one point or another, they have to hide this shit. Okay? They have to account for it on their books somewhere. And they may in fact be covering up losses in other places in their portfolio or other places on their books, you know, due to other market abuse. But, you know, I think in the long term, I mean, if this case really goes anywhere, which I really hope it does, what it will demonstrate is that there is a need for regulation of stablecoins as securities. Cryptocurrencies, on the other hand, are quote-unquote commodities, especially if they do have the backing of a physical network out there in the world mining away into the night. If it's backed by, some representation of those, of the same, maybe we'll give it an exemption from securities, only because the underlying asset can be publicly verified at all times. That is the only thing that should discern it. So all of these ERC20 tokens that have a backing of Ethereum that can be demonstrated at any time, I think that qualification right there discerns them from being quote-unquote securities and kind of relieves them from the regulation scope of the SEC. Again, it's because the rest of the world doesn't have to implicitly trust that those reserves exist. They can verify it on Ethereum's blockchain. Now we can verify that certain transactions happen on the Ethereum blockchain, but what we can't verify is the US dollars in question underneath. When we're talking about tethers being issued on the Ethereum blockchain, they do it via ERC20. And so whether or not there's actual US dollars to represent, I don't know. I just don't know. But I think that if this case gets any real any real traction, that we are going to see pretty much every regulatory body out there, or financial regulatory body out there, seize upon them and stab them to death. That's pretty much how I see that going down. Anyway, it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Wednesday at 8 p.m. Pacific Standard Time. And so until then, I'd like you all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as far as our last dance is concerned, let's look for something nice and quick here. Here it is. A little bit of Skindred for you. World Domination. Here on Coin Metal Last Dance. Thank you again for listening. And y'all have an excellent evening. Good night.